Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So today I'm going to share some trading tips, some guidance, some pointers from two extremely successful professional traders that I have a huge amount of respect for, and that's Ross Williams and David Paul. Now, through the video, I'm going to share these with you, referring to interviews from both of these traders, and together we'll expand on why what they're sharing is so critical to success as a trader. So if you're stuck with your trading and you're maybe still losing money, or even if you're making some money but perhaps lacking confidence slightly, or even maybe if you've taken a knock of recent for whatever reason, this is not a video you want to skip if that's the case, because this is really going to add massive value for you and really help. So make a cup of tea or coffee or grab a glass of water and let's dive in straight away right now with number one.
And your process your trading edge does not have to be complicated at all. And then don't lose any more than 1 or 2% in any one trade. And then you need to build the discipline. Now, ladies and gentlemen, can discipline be built or is it God-given? Of course it can. Why was an old man like me in the gym this morning at 6:30? Why? Twice a day. Did it take any discipline to get me to the gym this morning? None whatsoever. The paradox is that when you've got it, you don't need it. Okay? All right? To build discipline, folks, you're going to have to grit your teeth.
So what David is saying here, your edge does not have to be complicated. It just needs to be statistically proven. That's the bottom line. And then from there, manage risk and trade with discipline. That's all that's required. And as he goes on to say, discipline is built over time. It doesn't just come. It doesn't just exist. It's a lot like a muscle. So the more you train it, the bigger it gets. And the only way to build discipline is, again, as David says, to grit your teeth and stick to the process. And for those of you who are trading a strategy that generates maybe many small losses but infrequent, extremely large wins, you'll know how it feels when that 10R trade or that 15R or above trade comes around, especially if you add to your wins as well. When those come around, it's just as if a switch just goes click, comes on in your head, and you're pretty much there at that stage. You've built that discipline muscle and you're really making progress within your trading. Next.
And stick to the process. So the first step would be to sit down with one of these guys, sit down with Bussy, put together your trading plan, a simple mechanical plan. The more mechanical, the better. And then my challenge to you folks is to follow that plan without deviation for a batch of somewhere between 20 and 30 trades. That's going to take quite a bit of doing. It is a rite of passage. Now, I'm not a psychologist, and I've had psychologists in my classes, and they still don't know why this happens. But to build a habit, okay, any habit, you've got to grit your teeth and do it. And then all of a sudden, you actually build this neural pathway between your ears.
So as David says here, have a mechanical rule-based strategy and or plan. And again, the more mechanical, the better, and stick to the rules. And as David says himself, he's implemented this process with many traders over his now very long career. And it's the only way to not just succeed as a trader, but actually to become profitable, to build that discipline muscle and actually see results. And I love what he says on the topic of every trader only being X number of trades away from being where they want to be. Now, I don't completely agree, because I think what he should have added, really, in my opinion, was 30 or 40 trades, yes, but taken correctly and with edge. Because if you're missizing positions, if you're trading without edge, your sample size is irrelevant, really, isn't it? If you don't have a strategy that works, then whether you take 30 trades or 300 trades, you're going to lose money, aren't you? You have to have edge, you have to manage risk, you have to execute well, and then with those components in place, go away, take 50 trades, And then I'm sure you'll become the trader that you want to be. Next.
Now, in the same way that we make trading decisions based upon numbers and facts, we should probably run our lives that way to some extent. Do I own or rent a property? Well, how do I make that decision? Spreadsheet, numbers. What percentage return did I achieve on my capital last month? How do I make that decision? Spreadsheet, numbers. Should I save up and go on my holiday, or should I just bang it on my credit card and hope for the best? How do I make that decision? Spreadsheet and numbers. I think I made my point there.
So what's Ross saying here? Data is everything, and how do we make decisions as traders? Spreadsheets and numbers. I couldn't agree with this anymore. It's critical that you're able to not only statistically prove that you have edge as a trader, but things like saying I use support and resistance, it just doesn't cut it. Or I use an RSI and a moving average. Again, it just doesn't cut it. You need to know exactly where to trade your strategy, where it works best, why you're trading that market, and so on. You need to have a detailed trade backlog that allows you to understand win rates, understand excursion metrics, understand what time frame or time frames your strategy works best on, and so on and so forth. And again, the only way to accurately make those decisions is, as Ross says, spreadsheets and numbers, actual facts. You can't just go out there and, use an indicator and hope for the best. Next.
Risk management is not about avoiding risks. It's not about avoiding risks. It's about taking calculated risks. Paradoxically, the biggest risk is never taking a risk in the first place. I think plenty of people can probably, I see a few nodding heads. I think some people can relate to that. I'm not trying to get all deep and meaningful, but it's pretty easy to go through life sitting there doing fuck all. That's a huge risk because your outcome is pretty much known from day one.
This is really, really powerful, and this is really important as well. So the biggest risk that you can take is actually not taking any risks. Today, again, as Ross said, with interest rates where they are and with the economy where it is, traditional jobs in most cases are a dead end. That's a fact. If you're happy earning, let's say, £2,000 a month, and then losing it all to the mortgage, to the bills, to the car loan, the food shopping, and then being right back at square one, right back at zero at the end of the month, to then start again and repeat. Fair enough, some people don't mind that if that's you, nothing wrong with that. But like Ross said in the clip that I just shared, your outcome is known from day one. At the start of the month, not only are you facing an entire month of work and time wasted, but you actually know that, you know the outcome. And that is zero at the end of it all. You work for zero, or maybe just above zero if you're lucky. But if you aren't happy working for zero and wasting the time and the energy and wasting that significant part of your life for nothing in return, again, the only way out is to take risks. Literally, the only way to succeed is to take risks, whether that's learning to trade and gaining the skill of building your money up on your terms without the need for the dead-end rat race job, or even investing in property and building your money via rental income and capital growth, or even just investing in an index fund or an equities fund. Those are the only ways to actually get ahead. Not doing anything is, again, it's the biggest risk, because if you lose that job, or if the economy shifts and your skill set is no longer needed, you're done for. You're out cold, zero income, and it's over. And I think that's a very real and very scary scenario to face, isn't it, for a lot of people that do work in normal jobs. You need to have the skill, the ability to build your money on your terms, and not having at least one of those skills and those revenue streams is, again, as Ross says, the biggest risk that you can take. Not being involved is simply too much of an opportunity cost. There's too much to lose by not being a successful trader. There really is. Again, if that job goes or that skill set goes, it's over. Whereas trading skills can't just be taken away from you like all of those other things can. Next.
The process, again and again, you're going like, why is this crazy fucker from the other side of the world banging on about the process so much? Because it's the truth. Without a process, you're throwing darts, you're flipping coins. This whole thing is designed to get the odds in your favor. The trader with no process is like the blind squirrel who occasionally finds a nut. I said this before when we were up on the panel. Everyone here's been in high school. If you're doing the thing where you cut up a frog or heating a milliliter of water, whatever, you're always taught to go through the experiment with, in a repeatable and a consistent manner. The core of what we're trying to teach people in this business is to have a consistent and a repeatable process. So there's a number of reasons for that. If you sit down cold in the morning, you've got no ideas, you've got nothing. It's your very first day of working out how to trade a stock. Where do you start? You've got to have somewhere to start.
A process is critical. So without a process, you're pretty much just throwing darts and flipping coins. Whereas having a mechanical, rule-based trading process enables you to make proven decisions without the errors caused by discretion, without the should I, shouldn't I, without the guesses and the predictions. And as Ross said in the clip that I just shared, the trader with no process is like the blind squirrel that occasionally finds a nut. Without a proven mechanical strategy, you are trading blind, that's a fact. The odds are not in your favour, whereas with a statistically proven, rule-based strategy, the odds are in your favour. Again, that's a proven fact. Give that some thought and definitely make sure that you're on the right side of that equation, because that really is, it's make or break. Next.
Look at how thin that tail is. If you're in the top 2%, you should be making money. But genetics is not going to get you there, unfortunately. It's going to be education, it's going to be some work ethic. And that is the way of it, frankly. So if anybody's sitting here today thinking, oh, I'm not really smart enough to take this seriously, you know what, I thought I'd take a look at it, but it's really not for me. I know all these bright people, whatever. Get a different excuse, quite honestly. With a bit of hard work, you can do it. Just whether you want to or not.
This one, I can certainly get behind. IQ and intelligence matter very little in trading. Education and work ethic conquer all. There aren't many industries where that's true, but I would definitely say that trading is one of them, because this is a skill that can be learned. This is a skill that can be perfected. And as he actually mentioned in his talk that day, a lot of the world's most successful traders aren't extremely intelligent, might not come from the world's best universities. They're just normal people who've worked extremely hard, put in the time, put in the effort, put in the energy. And as Ross says himself, they've undertaken the all-important education, they've learned from people that are further ahead than them, replicated their process. And again, what it comes back to from there is work ethic. Really, really important. Next.
If you bet a rand on every time you chuck the coin in the air, on average, you're going to make 50 cents. You have now designed a positive expectancy system. So if you can find somebody to underwrite that, then Barry, that's your edge. Okay. And that is the objective, folks. But if you can be right 50% of the time, and you can make twice as much when you're right as you lose when you're wrong, then you've got a method of making money for the rest of your days. And that is the challenge, to learn how to play the game over and over and over again without fear or hesitation. It's a cracking game to play. The most important thing, folks, is don't lose any more than 2% of your kitty on any one trade. That will keep you alive long enough to get good at this. Focus on perfect execution of the system. If you focus on the process of trading, the cash will take care of itself.
When you have a proven strategy that provides edge, your only job is to play the game over and over and over again without fear or hesitation. As David says, that's how you gain a method of making money consistently for the rest of your days. When you have this, when you have a proven strategy that you know works, again, as David says, focus on perfect execution of the system, and if you focus on the process of trading, the cash really will just take care of itself. Next.
Now, folks, the man in the red was lucky, unfortunately. What's the probability of a bad one? A half. Now, what's the probability of two bad ones in a row? A quarter, half times a half, which is a quarter. Now, in a 50% system, unfortunately, you get 2 bad ones every 4 trades. Ladies and gentlemen, if you were to bet 50% of your coins on any one trade, you go bankrupt every 4. You understand that? Gets worse. What's the probability of 3 bad ones in a row in a 50% game? A half times a half times a half, which is 1 over 8. That means throw a few coins when you get home. That means that in 8 throws of the coin, or 8 trades in a 50% system, you have a cluster of 3 bad ones in a row. That means, ladies and gentlemen, that if you were to bet a third of your coins on any one trade, you go bankrupt every 8. And most people go bankrupt because they bet far too much on any one single trade. Now, the bet size is the difference between your entry point and your stop loss.
If you don't manage risk efficiently, you will go bankrupt and you will empty your trading account. The killer is always betting too heavily on any one single trade, which is why the 1% rule is so prominently discussed by professional traders. Now, is that binary? Absolutely not. No. What you risk will depend on strategy, on market volatility, and on and on. But 1% is certainly a safe measure to stick with, as it keeps you in the game long term, and as David says himself, it prevents you from just emptying the kitty unnecessarily. Right, that's it for this relatively short video today. I really hope that's helped. I hope that's added value for you. And those are 8 things that are really critical to know, to understand, and more importantly, to take action on, because I can tell you these things all day long. Any other professional trader can tell you them all day long. But if you don't actually listen, if you don't act, if you don't manage risk, if you don't execute well, if you don't learn strategies that actually work, then you're just going to stay stuck where you are. Nothing's going to change. So again, it really is down to you. Anyway, I hope that helps, and I hope that triggers some inspiration. I'll leave it there for today, and as always, trade with edge, with consistency, and I'll look forward to having you back here on the channel soon. Thanks, everybody.